Welcome to Financial Focus, brought to you by Gulf Coast Financial Services founder and CEO, John Kuykendall. John and his team of financial, legal, and tax professionals have provided North Florida savers and investors sound, comprehensive financial guidance for over 25 years, helping you to achieve important life and planning goals. Be sure to like, subscribe, share, and tune in for more Financial Focus by visiting GulfCoastFinancial.net.
Here to keep you financially focused is the founder and CEO of Gulf Coast Financial Services, named Best of the Best in Financial Services 7 years and running by the readers of the Lake City Reporter. John Kuykendall providing us guidance and perspective on the economic world and what we need to be doing with our money, our finances, our investment, our retirement accounts in order to achieve those financial goals that are important to us. And John, we always appreciate the time and the information that you share.
Well, thank you, Peter. It's great to be here, and it's great to be able to share a little bit of our knowledge with the audience out there.
Well, I know that we've got a lot going on in the financial world, so clarifying and uncomplicating the decisions is no easy task. But John, you always talk about the importance of having a plan that we can rely on, and that plan will help to make sure we are continuing to make forward progress and take the steps necessary, regardless of what the conditions in the world are around us.
Well, that's right, Peter. The plan gives you the ability to have an outline, a roadmap of where you're going, how we're going to get there. And if you have that plan, Peter, I really think what the market's doing, it isn't noise that you need to be that concerned about. We need to be aware of what's happening in the world, but it's not something that we need to make a knee-jerk reaction. You know, so much of investing is emotions. And if we look at history, we know that while the stock market has done relatively well over a period of time, the average investor makes less than 3%, I think was the number, because they're in and out. But unfortunately, they're in and out at the wrong time.
Yeah, and the Dalbar Institute does annual reports on the returns of the market compared to actual investor returns, and they show that time and time again. The average investor is not making the returns of the market, often due to knee-jerk decisions, emotional reactions, and just not following some of the fundamental principles of long-term financial success. We'll try to throw a link to some of those Dalbar studies in the description and the show notes if you want to check a few of those out, ladies and gentlemen. But we are going to talk today with John about some of the fundamentals that can help you make up that difference and not lose some of what average investors are losing out to because of those kind of off-path decisions. John, number one on the list, invest early, invest often, and invest as much as possible. And if we just make that a habit and a routine, then more than likely, we're likely to stick to those habits regardless of challenging times.
Well, that's right, Peter. I mean, one of the things that we've talked about on the show in the past is dollar cost averaging. And so if I'm investing continuously in the market, I'm going to be buying my shares at different prices. And over time, it's proved that dollar cost averaging in the market is better than us just trying to go in when we think the market's up. You know, I always think, you remember that chart that I know you've seen it, where we talk about when the market's going up, there's a euphoria and everybody's excited. We get to a greed point. And then when the market comes down, we start to get to the panic stage. And that's what the average investor does. If they will just continue to be proactive and to have a plan in place that they know that they're going to invest their money over a period of time, be in the market. It's not based on how long you're in the market, or when you're in the market, it's how long you're in the market. The longer we're in the market, the better we're going to do.
Yeah, and I'm just going to use the example of like a Roth IRA contribution. Those that are doing $500 every month on a specific day of the month, they're likely to continue with that behavior. But unfortunately, John, those that sort of save up $6,000 and say, I'm going to invest at the right time, when things happen, when we have challenges, when the market is down, a lot of times, because it's not a psychological routine, those savers may actually not make that investment. They're the ones that are likely not to make the progress or buy in at what truly is an opportune moment. So early, often, as much as possible, and by all efforts possible, just make it habit and routine. Number 2, for practical financial foundation and progress, staying out of debt, John.
Yeah, Peter, we talked about this before. I'm really against debt. I think we have to have some debt, our home debt, but everything else we should avoid. We should be able to prepare, have that emergency fund available for emergencies, but then also be able to pay off our credit cards every month. I don't want to have any debt that I can't write off my taxes. And, now very few people actually do long forms on their taxes anymore. So we should have no debt except our home.
Don't get sidetracked or distracted. This really circles back to that habit and behavior and routine from number 1, as early, as often, and as much as possible. But news of the day isn't really what we should be focused on with our financial progress.
Well, unfortunately, there's so much fake news out there that it's really hard to figure out what the true news is. I got a call last night from one of my clients, a good friend of mine, and he's concerned that he's been reading this stuff about the bank's going to take his money. And all that is just some kind of hype to sell some product that we probably shouldn't be investing in to begin with. But you've got to weed out the fake news from the real news and look at the market as it's a long-term progression, and we don't need to be worried about what's going to happen today or tomorrow. We need to be worried about long-term. Every bear market has had a significant recovery. And so how do you know when the recovery is going to be? You don't want to miss it. I mean, come on.
Yeah, and a lot of times the best days in the market happen right after the worst days, or the best periods in the market right after some of the worst periods. So it bounces back, keep with it. And John, that really boils down to kind of some fundamental understandings. I really like these next 2. Essentially, there are 4 simple things that we do with our money: pay taxes, pay bills, spend, and then invest.
Those are the things we're doing. And, we're going to continue to pay taxes forever. So while we're young, we need to be investing our money the best we can. We take a proactive approach to the market. And I think everybody needs to be proactive in investing and making sure that they're saving for their retirement.
And then when we save or invest that money, there are specific jobs that our money can do for us. Grow, be safe, be liquid, or provide an income. Money's not a great multitasker, and those things may change over time, what we need our dollars to do.
That's right. I mean, while we're working, we're really not, we want it to grow, but we're not worried about the income component. As we get older and we retire, we're going to be more concerned about the income component. And that's why I say we need to have that income plan in place to prove to us that we're going to have sustainable, predictable income coming in every month to live on.
You spoke to the importance of dollar cost averaging, but another fundamental piece of investment success, rebalancing on a regular basis.
Oh, yeah. If your fund or your investment, if your stock made 20% last year and it was only 10% of your portfolio, it's out of sync. You need to rebalance and move your portfolio around the different sectors, because this sector that's in vogue this year won't be in vogue next year. So what you want to do is rebalance and make sure that your dollar cost averaging into the right sectors.
Rebalancing can be regular, routine, strategic, or tactical. And rebalancing routinely can help achieve several financial goals: keeping your risk in line with your risk tolerance, capturing gains along the way, and then keeping the portfolio in line with the changes and the evolution that will happen over our lifetime.
Well, Peter, that's true. And I can always tell when the risk tolerance of a client is out of whack, because I'll get a phone call. No matter if the market goes down, I'm going to get a phone call. Now, my job, and we're doing a really good job of it because I haven't received a lot of phone calls, is when the market takes a dip, We want to make sure that I can still sleep at night. My risk tolerance is where it's supposed to be. And I'm going to be able to handle that downturn without my emotions kicking in and me doing something I don't want to do.
Not a lot of places, John, where we find advantages with our money, but retirement accounts certainly offer some pretty measurable advantages and benefits. So another fundamental financial principle for long-term success: maximize places where we have advantages with our money, really utilize those retirement accounts as much as possible to the greatest extent.
Oh, that's right. And we always want to get the match at the company. Now, if your company has a Roth 401k, I want you to get into that, because Roth 401ks and Roth accounts are going to be the way to go in the future. As taxes continue to increase, and as we build this nest egg up and we have to take it out, we want to make sure that we're paying the least taxes that we can pay. So I'd rather pay on the seed than I had on the harvest, as we've talked about before. But you always want to make sure that you're contributing enough to get the match. It's free money. And if your company provides some type of simple or 401k, you need to be into it so that you can maximize your retirement.
Practical financial foundations, regardless of times, regardless of market conditions, that will help to make sure that you are making forward financial progress. That's what we're talking about on this edition of the program with John Kuykendall. And if you want to make sure you've got a plan that reflects these practical foundations, and that you've got a relationship with an advisor, experienced, qualified advisor who can help you make decisions along the way, pick up the phone, give Gulf Coast Financial Services a call, 386-755-9018, 386-755-9018. And these next items, John, probably the most important reason why we need to have that relationship with an advisor is that we have different phases with our money throughout our lifetime, and we've got to make sure that the plan reflects both the current and the future phases that we are aspiring to move toward.
Well, that's right, Peter. As we move into retirement, we're going to need that money to have income for us. And so we want to make sure that we've set aside enough for retirement. We know it's going to last. We need to make sure we've covered long-term care. We need to make sure that we have a plan to be in place to take care of our spouses, either one, depending upon which one goes first, because we're going to lose one Social Security check. So certainly we need to be proactive, and we need to make sure that we have all those things covered in our plan.
Accumulation, preservation, distribution, and legacy, those phases that we move through with our money. John, we don't want to be in the preservation or distribution phase and the plan still acting as though we are in the accumulation phase. There may be something off kilter there.
Well, and we don't want to be in the distribution stage, which is when we've retired. If the market is going down and we're having to live off of all of the money that we've invested in the market, we don't want to do that. We want to make sure that we've got other sources of income so that when the market's down, I have income coming in and I don't have to pull as much out of my growth account, my growth bucket. But when the market's up, then I get more out of my growth bucket, and I can do more things. I can spend more money. And of course, we always, every parent, every grandparent wants to leave money to the kids and grandkids. But I got to tell you, Peter, it's getting more and more that as we retire, we're more concerned about making sure we have the money than we are about leaving money to the kids. I've had a lot of clients say, hey, look, they'll take care of themselves. So,
well, we talked last week on the program about how facing headwinds and downturns in the market do happen. They are routine. They are predictably unpredictable. We don't know how, when, or how much we will see those downturns in the market, but they must be accounted for and acknowledged that we will encounter them at a point in time. However, sticking to these practical financial foundations, each one of these could be a show all on its own that we really go in depth. But sticking to these is critical to a successful outcome and to continuing to make progress, regardless of what headwinds we face, what the news may be telling us, or when we do see those challenges arise.
Well, that's right, Peter. We got to be consistent. We've got to be able to understand that we have everything in place that's going to take care of us. We can sleep at night. Our risk tolerance is there. Our income plan's there, and we're putting money aside for retirement. And we know that we're not going to be like 40% of the United States, and that's living on Social Security alone, 40% of the retirees. Social Security is not there for your retirement. It's there to supplement your retirement. And, the more and more I read, we're going to have to, Congress is going to have to make some changes pretty soon because Medicare and Social Security are getting closer and closer to needing restructuring. How that restructuring is going to take place for retirees and pre-retirees, we need to make sure we have that plan in place to cover whatever happens.
John Kuykendall and the team from Gulf Coast Financial Services, helping savers and investors and proactive planners in North Central Florida, Lake City to Gainesville, stay financially focused. And if you would like that financially focused plan and the written retirement income plan that helps you understand and stick to these practical financial foundations for success, pick up the phone and give a call. 386-755-9018, 386-755-9018, 386-755-9018. If you've got a plan or if you've got different accounts out there, you'd like to bring them together into a plan and do a forensic financial analysis, a strategic review and strategy session, they offer that with no cost, no obligation. Just pick up the phone, give a call. 386-755-9018, 386-755-9018. John, we always appreciate the time, the perspective that you provide to help us keep a level head even in challenging times.
Well, thank you, Peter. Let's everybody stay level out there and make sure that we dollar cost average into our accounts every month.
Be sure to like, subscribe, share, and tune in for more financial focus by visiting GulfCoastFinancial.net. The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims-paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes. John Kuykendall is registered with and securities are offered through Kovac Securities, Inc., member FINRA SIPC, found online at www.kovacsecurities.com. Advisory services are offered through Gulf Coast Financial Services, Inc., a registered investment advisor in Florida. Gulf Coast Financial Services, Inc. is not affiliated with Kovac Securities, Inc. or Kovac Advisors, Inc. Past performance is not indicative of future results. All investing involves risk. Investment decisions should be based on your own goals, time horizon, and tolerance for risk. Due to various factors, including changing market conditions and/or applicable laws, the content may no longer be reflective of current opinions or positions.